Hello everyone, welcome to the channel of Trigonometry. Today is Sunday, February 22nd. What an incredible week. So many things have happened in the past week and I'm here to talk about everything just happened and also going to talk about what's going to happen in the upcoming week. Now first, let's take a look at the P&L. So my Roth IRA is down a little over 1%. No big deal. We have a lot of fluctuation back and forth in the past week. 1% is nothing. And traditional IRA is also down a little over 1%. Back and forth in the whole week, but nothing very significant is happening. And here I'm going to talk about what was very significant just happened in the past week. So, as you should know, the Supreme Court just struck down the IEEPA tariff from the Trump administration. The Supreme Court was basically saying President has no power to issue tariff under IEEPA. They're basically saying IEEPA is not a tool for raising tariffs. You can do other things with IEEPA, but not to collect tariffs. The Supreme Court did not rule out the president's power to issue tariff entirely. The president can still issue tariff via other sections. And that's exactly what Trump just did. Right after the Supreme Court ruling, Trump announced initially was 10% global tariff under Section 122. And just a few hours later, Trump revised his 10% tariff to a 15% global tariff under Section 122. I asked Gemini what's the new effective tariff rate based on this new announcement, this new 15% global tariffs. So this is what Gemini gave me. The effective tariff rate is projected to rebound to approximately 19.6%, surpassing the previous 16.9% baseline. So 16.9% was before the IEEPA tariff was struck down. The effective tariff rate was 16.9%. Now, with the new tariff, 15% tariff replacing the IEEPA tariff, the new effective tariff rate is projected to be 19.6%. This has a lot of significant impact, even though by law, the president can only issue the tariff under Section 122 for 150 days. But the president has the power to ask Congress to make this permanent. So we will see what's going to happen next. This is the basic calculation, the math of how we got to the 19.6%. So the floor was 9.1%, which consists of Section 301 tariff for China and Section 232 tariffs with steel and aluminum. Add on 15% new tariff applies to roughly 70% of the US imports, effectively around 10.5% impact. The exclusions are imports from Canada and Mexico, approximately 30% of the total. There we have 19.6% of total effective tariff rate right now. As I said, the Section 122 tariff expire automatically in July 2026 in 150 days. And the litigation risk is that while Section 122 is more explicit about tariff than IEEPA, legal challenges may arise regarding whether current deficit qualifies as a balance of payments emergency defined by the statute. What are the impact by industry? Toy, consumer electronics, and apparel sectors will be hit hardest as they are overwhelmingly dependent on Asian supply chains, China, Vietnam, Bangladesh, that are subject to the new 15% surcharge. In contrast, sectors like automotive and produce are partially shielded because a significant portion of their volume comes from Mexico and Canada, which are exempt under USMCA agreement. Toys and games. This sector is the single most exposed category. Roughly 85% of all toys sold in the United States are imported, with the vast majority originating from China. The problem is toy manufacturing requires specialized labor-intensive tooling that does not exist at scale in Mexico or Canada. Regarding the price outlook, industry leaders warn that the 15% levy will directly erode margins, forcing price hikes on everything from action figures to board games, just as industry prepares for the 2026 holiday cycle. Now, regarding consumer electronics, while Mexico is a growing hub for final assembly, the component supply chain, like screens, chips, batteries, remains deeply rooted in Asia, including China, Taiwan, South Korea, Vietnam. Key items including smartphones, game consoles, and laptops. Even if a TV is assembled in Mexico, if its panel and logic board come from Asia, those components may face tariff upon entering the North American supply chain, or the finished good may fail rules of origin standards, triggering duties. And regarding apparel and footwear, approximately 97% of clothing sold in the US is imported, while some production has moved to Western Hemisphere. The big three suppliers remain China, Vietnam, and Bangladesh. Sourcing shift. Vietnam has recently overtaken China as a top supplier, but both are non-USMCA nations and subject to the 15% tariff. And we'll be expecting immediate price increases on fast fashion items where margins are too thin to absorb the tax. And regarding the USMCA, unlike electronics or toys, these industries have spent decades integrating with Canada and Mexico. The automotive, a significant percentage of vehicles and parts flow tariff-free across North American borders, while European and Asian imports will be hit by the 15% surcharge. The mass market domestic supply chain is largely protected. Agriculture. Mexico and Canada are the top suppliers of imported fresh produce to the US. Your avocados and berries are likely exempt, whereas processed food from Europe or South America will face the new levy. So this 15% new tariff will have significant impact on the market. And if the retailers decide to raise their price immediately after the 15% tariff, we have a new round of inflation going on. And the timeline for Fed to cut rates will be pushed back even further. I think we might not get any cut in 2026 because we're facing even more uncertainty, and also the Supreme Court did not give any specifications regarding the refunds. How will the Trump administration go about the refund? Will they be more litigation regarding the refund. Who will be getting the refund? Will consumer getting the refund, or just the corporations getting the refund? A lot of these questions will be discussed. I think this will lead to a lot of chaos. And I remain my view on the market that I am bearish, I am hedging. I'm very, very cautious not to buy the dip too early until more clarity comes out of this. We'll see what happens on tomorrow, how the market react to this new announcement. My gut feeling is market won't like it because the simple fact the immediate effective tariff rate is higher now, not lower, compared to before the AIPA ruling. That alone is a big question mark. That's a huge uncertainty. Also regarding the legitimacy of this new tariff, nobody knows. This lawsuit can be going on for a long time, and at the same time, Trump could be using other sections to impose other tariffs if this Section 122 gets struck down again. It's gonna be getting even messier and messier from this point going forward, and it has a very negative impact on inflation because of this new tariff. I think the Friday bounce was a little premature when the Supreme Court ruling just came out, and actually you can see there were a lot of company that were bouncing the highest wasn't even related to the tariff ruling, like Google and Meta. Like, why are those companies bouncing so hard? And in addition to the tariffs, we also covered on my previous video regarding the hawkish FOMC minutes. Several participants have discussed the possibility of upward adjustment to the target range of the federal funds rate. Could be appropriate if inflation remains at above target levels. So this is the another bearish factor that I talked about in the last video. And regarding Iran, looks like the White House is going to have a talk with Iran, so no military actions over this weekend so far, which is good, but we'll see what happens next. Blue Owl, we also talked about this in my previous video. This private credit issue is getting worse. This will impact all the software companies and all the AI infrastructure, AI data center companies as well. You see a lot of bearishness in the AI neo clouds on Friday. They were down from like 5 to 8 to 10% because of Blue Owl, in my opinion. And this will continue into the next week. And then the AIPA tariff we just talked about. We still have a lot of bearish catalysts going on. And then next week we're going to have the NVIDIA earning, which is going to be huge. I think NVIDIA is very likely to beat earnings expectations, but the problem is, how would the market react to it? Because you always have this question, you always have this skepticism from OpenAI, how they're going to fund their capex that they claim they will be spending like over $1 trillion in the next few years, while they're still burning money. They're not making any profit. They're burning at $15 billion a year at this rate. That remains a big question for NVIDIA. And as you can see, Google bounced 4% on Friday. And then you see Apple was already exempt from the Trump administration. And Meta was up, Amazon was up. Amazon will benefit from it. But if you look at some other companies could potentially benefit from the tariff was like, for example, Walmart. Walmart was down. Target was up slightly. But you see this initial pump and it fade all the way down to go negative and then slight recover towards the close. And then you see Nike, right? Nike was still down. You look at Elf was up, but you still see this massive swing and back and forth. A lot of these companies that were up were not like specifically benefiting from this tariff, which makes me very confused. And you look at IWM was basically flat. If this tariff ruling was actually bullish news, then IWM should be the primary beneficiary of this ruling, but yet IWM is flat. What jumped the most was QQQ, with Google leading the charge, which doesn't make a lot of sense. I would say Google was going up mainly because the new Gemini model released and it got a lot of great feedbacks. I'm still bullish Google. I have a lot of Google shares still. I sold big part of it, but I still have a lot of Google shares. And I'm still bullish Google, but this bounce right here, it seems a little suspicious. It almost felt like they wanted to pump Google just to use that to pump the index, because as you know, Google is almost $4 trillion market cap. So once Google goes up, it can pump the major index like QQQ, SPY, and Dow Jones. The simple fact that the money is chasing Google instead of the primary beneficiary of this potential tariff beneficiaries, it tells me that the tariff ruling is not that big of a bullish catalyst for the market. It was more like I would call it a dead cat bounce on Friday. And as you can see, a lot of these high beta stocks are very red, like Rocket Lab, Ondas, Nebius, Iran. A lot of these security stocks got dumped again on Friday because Anthropic released a new product regarding security. So, and you look at CrowdStrike down almost 8%, Cloudflare down 8%, and some other like Zscaler down 5%. This software selling still continue. You see IGV is down 1% near the low. Regarding IGV, I still maintain my view that IGV will go below this 77 line to pierce the low and flush out all your stop losses and then bounce back. At this point, it's almost very, very certain that if you buy the dip right here, you almost will certainly get flush out below like 75 or even lower. We will get this huge red candle to flush out everybody here and then bounce back. This is typically how Wall Street works. By my past experience and my observation, I think it could potentially flush all the way below to fill this gap at $73 for IGV. You can see this little gap right here. This gap fill and flush out will be pretty epic. And for next week, my strategy is still to short the pumps. I think Friday was a dead cat bounce. the thesis is still intact, and February is usually the weakest month in the first half of the year because people sell stock to pay taxes. After the January pump, January was mainly where the new funds get reallocated, and February you lose that catalyst, and then this year, because of the lack of buybacks from the mega caps, because of the high capex expenditures, the market will lack a lot of support coming from these Mag 7 stocks, and we're gonna have a little bit of problem from liquidity side as well. Regarding QQQ, I'm still looking at the 580 line. We have a bit of consolidation in the past week, but I think we're going down to retest 580 until we find a bottom or not. We'll see, but 580 is the final destination in my opinion. And that's all for today. If you have any questions, comments, please leave in the comment section below. If you wish to join my Discord channel, please check in the description below. And I'll see you next time. Bye.